Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, the Australian dollar is improving after moving away from the bottom side of its range around 68.35.50 area and now possibly heading on towards this top side around 69.65 after a weaker than expected US non-farm payrolls reduced expectations of an imminent Federal Reserve rate hike. The US economy added just 57,000 jobs in June, well below the 110,000, while May payrolls were revised down to 129,000 from 172,000. The employment rate unexpectedly fell from 4.3% to 4.2%, and annual wage growth held steady at 3.5%. The softer labor data pushed the US dollar and a drop from 103.35 to 100.78. Quite a significant fall, which has prompted markets to trim expectations for a September rate hike. Despite this, Fed Chair Kevin Walsh maintained that inflation remains too high and reaffirmed the Fed's comment to price stability. So turning to the technicals, well, we've got a bullish RSI, a flat or neutral MACD. I would like to see a break above 69.65, which could prompt a move on to 70 to around 70.5 cents. Any weakness likely to be snapped up because I still feel there is potential rise, but be aware and keep an eye on these weeklies, as I would like to see a little bit more strength from there. So moving on to the euro, the market has performed relatively well and pushing away from that key area or 113.40.50 and now on track for a challenge to 115. A break there could give further stability and a rally on to 116 and reassess. When it comes to dollar yen, well, the bears are back in play here. From the top side rejection around 162, there was risk that a possible intervention, and also with the weaker dollar coming into play due to the weaker non-farm payrolls numbers, has put the focus back on track to the downside, and a break of 160.5 could put the move lower to a region of 158.50.80 and reassess from there. I am keen for a move lower, considering the technicals have dropped quite heavily. Sterling increasing its momentum and likely to continue if we see a clearance of 133.75. Just getting there now, and around that 75.80 level could see a move on to 135 to 135.5. A very strong move. Sterling has been playing very bullish over the last few days, especially with these candles in play, could support that upside. Wrapping up with commodities, keep an eye on this trend line, which comes in roughly around 4,185. A New York close above there, which does look likely, could see a rally on to around 4,250, or at least 250 points from the break, so keep an eye on that. And oil, well, the market did find demand from that $67 mark, and let's keep an eye in case we see that continuing on to 70 to around $72 as a potential target. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report. And I hope you enjoy the great starts on the new weekend.